Let's talk more about today's sell-off and bring in JP Morgan's Marco Kolanovic. Marco, great to have you with us on a day like today. What did you make of this action, and is the activity and the highly shorted names and the astronomical runs they have had, does that have anything to do with what we saw in the broader markets?
Yes, I think it has to do with it. As you guys mentioned, basically you have long short investors, some of them running leverage. And if your short moves like 10, 20, 100%, that's a pretty big VAR shock. So you need to close that position, you cover your short, and you're going to take down your longs. If that happens across few names, even if these are small names, it can produce quite a bit of a market turmoil. That said, nothing fundamentally changed in the market. So we think it's a purely technical delevering on account of some of these stories. So we think it's actually buying opportunity.
Do you think, and I'm not sure what, the reaction you've had from clients, funds about this, but do you think they changed the way they trade? Are short sellers less inclined to short? Have the rules of the game changed at all because of what we saw go on with a GameStop?
I think it can be a little bit of a lesson. We, especially our quant research, we analyzed this a while ago. If something has a very, very large short interest, you don't necessarily want to be short at. So in all of the sort of quant short factors, you kind of eliminate the most extreme ones because these accidents can happen. Historically, did happen. We saw that in U.S. and Europe, and so whether it's going to change, I think short-term people are going to be just a little bit more cautious about which name they short. What's the short interest? Some of them may replace some of these single name short to the index short, but long-term, it's not entirely surprising what happened and not entirely unexpected. The magnitude of a move of this one stock is just, it's obviously pretty amusing.
So, Marco, how long do you think, I know this is the trillion-dollar question, but how long do you think this can take to bear out? Obviously, fundamentals are great in some names and they've been sold off. How long can this take?
Look, I think it's a short-term event, because again, there is nothing fundamentally that changed in any of these names, longs or shorts, and we actually think fundamentally backdrop is good, be it earnings, be it positioning, be it COVID or monetary policy, So how long can it take? I wouldn't, naively you would take until these positions are squared, which we know some of them were, and from your coverage. So I would think pretty short. Now, yes, VIX at 37 doesn't feel anyone good. I think it's a bit of an anomaly. Realized volatility, even with today's move, is only about 12 over the past 2 months. So 12 versus 36, that's a pretty big difference. Actually, that's a record difference.
Hey, Marco, it's Tim. Part of the rationality, I think, of the view that you've expressed on this show multiple times, and I can remember this near the lows of the COVID trade in March, where you pointed out equity positioning and why ultimately that was a trigger. I'm reading your note. You've mentioned equity positioning again as the reason that the bull market is not disrupted here. Can you put some numerical context on that, please?
Yes. So when we look at basically 15 years, or 20 years, so longer-term historical context, positioning is only in about 30th percentile. So that is low, and the simple reason is because volatility is high. We see that today. VIX was, 25 yesterday and 35 today. And when you have these levels of VIX, over the last year, people are not taking very large net exposure, type of exposure they would take in 2005 and 6, or frankly, even 11, 12, and 13, So the bottom line positioning is low. Now, some people will tell you it's high in the context of last 2 years. Of course, we had the worst recession, worst pandemic. We had a global trade war 2 years ago. So in that context, is a bit high. But in a longer-term history, 10, 20 years, this is still a low positioning. So as I mentioned, 30th percentile, 3 out of 10.
Wow. Marco, your target on the S&P 500 for the year is 4,400, which, according to our CNBC database, is the highest on the street. Is part of that this notion that cash on the sidelines will come in? And how much of that cash is being held by the individual investor, like the Reddit army of investors out there? And so are you watching this to see how it unfolds in that either the Reddit investor becomes emboldened because they're making a money hand over fist on these names, or, as some people posit, it ends badly, they get burned, and they walk away from the markets for maybe a decade?
So I don't think it's a Reddit investor, a Robinhood investor, and we don't sort of count on them. We think it's really institutional money, so bonds versus equity. So when you look at the sort of trillions of dollars in pensions, endowment, insurance companies, asset managers, basically we think that these investors are already, there is a dilemma in front of them. You have like a bonds which are yielding very low, and frankly, if inflation picks up, these bonds will go lower, right? Or you have equities where if the COVID is recovering, which we think it is pretty strongly, then you will have a stronger growth, and you will have a sort of earnings growth, and people will go from bonds to equity. So we really think it's institutional money. When you look at the Reddit, you can calculate how much of these stimulus check, like how many of these investors is not a huge amount of money. They can move a dollar stock, which is like $1 or $2, like small cap or micro cap names. We don't think they really can move the whole market.
Okay. Marco, thank you so much for your thoughts. We appreciate it. Marco Kolanovic of JP Morgan. And you may debate at home who's the winners, who's the loser in this whole thing, Karen, but there is definitely a winner in this, and that would be AMC today, and not because of the stock surge.
Yeah. Because of them being able to sell stock, you mean? Or
right, exactly.
We were talking about
not
this.
just because they're up 300%, but because they're able to actually use that to their advantage.
Yes. Well, I did a little work on that actually after we talked about it. It looks like they might not have any more shares authorized. They might have bought the balance when they did that stuff, when they bought stock at 5 or sold stock at 4 or something. They were probably delighted at that moment, which was only 48 hours ago, I think. But I think if I were any heavily shorted stock, you got to be filing a registration statement as fast as you possibly can right now. I don't know how long it'll take them. Apparently, they can still use their September financials. Those are still good, but they need to get new shares authorized. They ought to, I'm sure they're working on it, because we looked at, when you and I were talking the other day, I thought, well, this is great for the debt. That paper was skyrocketing today because this company may be able to sell shares and get themselves out of financial straits that are, terrible. Good for them. That CEO has been working tirelessly. I hope he's able to take advantage of this and get some of that balance sheet debt under control.
Yeah, AMC raised $300 million by selling stock. Tim?
Well, a name like Macy's that I've talked about for different times over the last few months for fundamental reasons. Today, the last couple of days have been a gift. My view on Macy's re-rating has been born about the balance sheet is better. They've taken a real attack on their digital business, and they've done very well with it. They've gotten inventories in control. But to be clear, I sold half of that position today, and the re-rating of Macy's, because it was a department store like Dillard's, but also because of short interest that at one point when I started investing in it was 40%. And that's a tailwind to the investment, but there are a lot of stocks out there, and I was looking through other names that I'm long Viacom. Today was a gift. And I think in some sense, investors need to remember where you've seen these outsized moves. The other side of it is, look, I don't care where AMC raised money today, and I don't care where GameStop is trading. There's a reason why these companies were imperiled, and their business model didn't change overnight. And I think with some of the companies that are real companies that don't fit the description in terms of either the penny stock or the size of the outstanding short interest, but are recovery stories, and if they've been caught in this tailwind, I urge investors just to take a look at your fundamental rationale for where you're still holding this stock, or are you just feeling like, wow, this could go a lot higher because somebody else thinks it's going to be pushed higher. And I think you have to be very careful about that.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.